Very quickly tonight, we shall be looking at IS 20, and that is accounting for government grants and disclosures for government assistance. Now, this particular standard is divided into two. We have the accounting for government grant, and then we have the other one, which is government assistance. If you can see from that standard, you will see that we have government grant, we have government assistance. For government grant, you account for it. That's the meaning. But for government assistance, you only have what we call disclosure. That is, you disclose it in your statement of policies, which is also known as the notes to account. That is that for that. It's one of the simplest standard, one of the simple standard. But if you don't know how to appropriate it, it will also always become an issue to you. So quickly tonight, accounting for government grant, it outlined the treatment that is required if you receive a grant from the government. As well as an accountant, or if you are engaged in somewhat or some way to prepare financial statement, it's important for you to know how to treat any government grant that you receive, as well as other government assistance. So that is the whole idea of this standard, to guide you to know what exactly to put in the financial statement whenever you see or your company or entity or your clients receive a government grant as well as a government assistance. Like I've always been telling us, whenever we are looking at standards, we look at it from the point of view of definitions, recognition, measurement, presentations, and then disclosures. This standard is covered under IS 20, that is International Accounting Standard 20. And so quickly, let's move tonight to the definitions. When we say government grant, what does it actually imply? What is the meaning of a government grant? Now, government grant can simply, according to IS 20, they put the definition forward as all those assistance or allowances from government in the form of transfer of resources for past or future compliance with certain conditions in line with operating activities. In other words, they are assistance that an entity will always receive once you're able to fulfill certain conditions, either in the past or in the future. That is to say, government will only give you that assistance or that grant, as it were, only if you have been able to meet with a condition. Usually, you have conditions of, you have a company, for instance, now, what is his name now? Obajana Cement Factory. When they were about to set it up, I think one of the relief that they gave to Obajana then was the fact that if you locate it in a certain place, you'll be paying lower taxes, as it were, as a relief. And that is not even the grant itself. Tax relief is not grant, as it were, but somehow there are some allowances that will be given to you. For instance, on your plant, your machineries, all those things, you'll be given what we call capital allowance. All those capital allowances that are given onto you, they are also part of your relief, as it were, and they are part of the thing that is being reduced from the way you are using all those your assets. Now, what I'm saying is this: when Obajana Cement Factory was about to be set up, they give them a condition that they should set it up in Kogi State, being not far from FCT. It was one of the conditions I was given, and that they will construct a road between Obajana to Kogi. I don't know, I can't remember that place, Kogi Junction or so. And that was one of those conditions that they gave to Dangote Cement Factory when they were going to put those that factory in that place. That's the little I know. I don't know how true it is. That's what I had. But then they got a certain relief on their allowances. So sometimes, as an entity, conditions will be given to you by government. For instance, they will tell you, if you if you are able to construct a road, for instance, now at a particular spot, they are going to give you, apart from the capital allowance, they are going to give you certain concession or some reduction from the cost of the asset that you acquire. So all of these put together is known as a government grant. We also have what we call government assistance. Government assistance, on the other hand, is an action that is provided by the government that involves the transfer of economic benefit to an entity or range of entities that qualifies for it. In other words, when we talk about government assistance, it is just like what the government will do if you're able to meet certain conditions. Now, this one is not like government giving you cash. It's not like government reducing maybe some kind of reliefs in your tax payment and the likes. This one is what government will do for you. Maybe an action that they will take for you if you are to meet certain conditions. Take for instance now the assistance of if you are going to put your plant in a particular place, you are going to make sure that electricity is available 24 hours. That's an action of government. You can't put electricity there, but government will decide to put that electricity there. So by and large, when we're talking about government grant or government assistance, as it were, the difference between the two is that government grant requires that you meet certain conditions, whereas government assistance do not necessarily need you must not necessarily meet that conditions for you to enjoy or to receive the grant. That is just the difference. So when we're just saying government grant, all that you need to know is for you to call it a government grant, certain conditions must be met, and for you to receive that grant as an entity. But if it's an assistant, you don't need to meet any conditions, as it were. I hope you understand what we are saying. And so that is that for that. So we have types of government grant. Now, like I told us earlier as we start this lecture, we have government grant, we have government assistance. For government grant, you are going to account for it in your books. But for government assistance, you are only going to disclose it in your statement of policies, which is also known as your statement of, your notes to accounts. That is that for that. Now, let's focus on a government grant. Then we move to, at the end of the class, we go to government assistance, which has to do with disclosure. So now, types of government grant. Basically, we have two types of government grant. We have what we call the capital or asset government grant. Capital or asset government grant. Apologies for all those that have not allowed him in. The next time you will not come in late. It's because you came in late. That's why I'm allowing you people to join late. Now, next time don't come late to class. Thank you. So let's quickly go. So we have two types of government grant. We have a capital or asset grant, and we have income grant. Capital or asset grant, they are allowances or grant that are given to an entity having fulfilled the condition of either you are purchasing, you are constructing, or you are acquiring a long-term non-current asset. A long-term non-current asset. If you are constructing, purchasing, or acquiring a long-term non-current asset, that type of grant that you receive is known as capital or asset grant. So in some textbook or they call it asset grant, and whereas some people they call it a capital grant. Why I put capital is this: you are always going to be given, some what is called a capital allowance, as it were. That capital allowance allow you to reduce the cost of your asset to certain amount. For instance, now, if you meet the condition of if you acquire, for instance, now we know that energy is a big problem in Nigeria. Now, if the government should say, now, if as an entity you are able to give what is it called now? You are able to give a local government energy supply. We are going to allow 20% of the cost of your machinery. We are going to allow it as a grant to you. That is, if whatever machinery that you are buying or whatever machinery that you later bought, that you buy for you to supply this energy, they are going to give you 20% concession. That 20% that they are giving to you is a grant. In other words, what you are going to be carrying in your books is, or what you are going to carry in your books is either you are recognizing an income. When we get to measurement, you understand it better. Is that you are recognizing 20% as income to you, as well as recognizing the cost of only 80% of the asset. Let me come again. Capital or asset grant has to do with the allowance that you receive or the grant that you receive, having made the condition of you either acquiring, constructing, or purchasing a non-current asset. A non-current asset, that is that for that. Whereas income grant, they are the other type of grant that you receive apart from the purchase, construction, or acquisition of a non-current asset. All other grants put together, that has to do with you meeting certain conditions, but it does not involve you purchasing, constructing, or acquiring non-current assets. A good example of an income grant is the grant that you receive if you are able to fulfill your corporate social responsibility to the community or to the society where your operational activities are. That is a very good example. So you can have two types of government grant: capital asset grant and the income grant. Capital asset grant has to do with the allowances or grant that you receive if you have been able to fulfill the condition of you purchasing, constructing, or acquiring a long-term non-current asset, and sometimes a condition where the asset will be located. I gave a good example of a company that they ask the company to locate its operations at a particular spot, at a particular place, because of proximity to the capital territory, as it were. And so for you to meet that conditions and setting up your company in that place, a grant can be given unto you. That grant is given unto you. You remove it from the cost of your assets or your non-current asset, as it were. Whereas income grant simply means all other type of grant that you receive as an entity, but it does not hinges on you buying or constructing any non-current asset, as it were. I hope we are still together. Any questions so far? We are still together. Can you hear me? If you can hear me, just give me a high five while we proceed. Thank you so much. All right. So quickly, let's go to the recognition now. Okay, Ismail Kosara. Okay, you lower the hand. Thank you. All right. You want to ask a question, Ismail? Kausara. You want to ask a question? I should go ahead. You are still raising your hands. Okay, let's go ahead. We go to the recognition now. So now for you to recognize government grant on the statement of financial position, two criteria must be fully met. What are the two criteria? Number one is that the entity must have fulfilled the conditions. That is number one. The conditions that will warrant the entity to receive the grant must have been fulfilled. Number two, the grant has become receivable. In other words, that is, there is a high probability that the conditions for you to receive the grant has been fulfilled, or it's highly probable that you are going to fulfill that condition. That is that for that. So once these two criteria are met, you can recognize your grant, that is government grant, on the statement of on your financial statement. Number one criteria is when the entity has fulfilled the condition. Number two, when it becomes obvious that the grant will be received, having this assurance that the conditions is highly probable that the conditions will be fulfilled by the entity. Now what we are saying is this: if the government has given you the conditions that you must draw electricity to the community for you to receive a 20% grant on all your non-current, all your PPE, as it were. Now, if you have been able to meet that condition of drawing that electricity to that community, you will receive that grant. Is that not so? That is that for that. Now, also the second one is like the first one. if the probability that you are going to fulfill that condition is highly probable, in other words, the percentage is above 50%, it means that you can recognize the grant in your financial statement. That is how it is. Now, let's go to the measurement, and that talks about the calculation. How do you calculate government grant? Government grants are measured using two major approaches. Either you use the capital approach or you use the income approach. Capital approach or the income approach. So that is that for that. Now, under the income approach, this one has to do with the first type of government grant that we talk about, which has to do with capital or asset. So any capital or asset in nature grant, this is where you use a capital approach. Please take note; it's very, very important. They can confuse you with questions. Anywhere you see that the conditions that you are to meet inches or that have been met by the entity inches on purchasing, acquiring, or constructing an asset, that is where you use a capital approach. Is that taken? Whereas all other conditions that does not involve purchasing, constructing, or acquiring a non-current asset, all other conditions, once they have been met, you treat them under the income approach. Now, under this capital approach, you can also use a two method. Either of the method is allowed, but you cannot use the two method at the same time. You can either use the full method or use the deferred method. It's very, very simple. When we talk about the full method, this full method now it talks about you deducting, the total grant from the total cost of the asset. In other words, you are no longer going to recognize anything like other income in your statement of profit or loss. That is for the full method. Take for instance now, the cost of your machinery is 100,000, and you get a government grant of 20,000. Now, under the full method, what you just do is you remove that 20,000 from the 100,000, and then you carry the asset in your statement of financial position at 80,000. The only thing you just do is you go to your disclosure and tell us that we receive a government grant of 20,000 and we have removed it from the cost of the machinery. It's as simple as that. If you don't want to use that full method, you can use the deferred method. Under the deferred method, you are allowed to divide the government grant into the useful life of the asset if it has been determined or if it has been estimated. Or you can use what we call the depreciation rate to determine how to divide the grant into the numbers of years. What we are saying here is this: the deferred method look at you dividing the grant into the useful life of the asset, and then you recognize in your statement of profit or loss, and then as other income as well as expenses. Of course, there will be depreciation. Now, under the deferred method, let me explain it very clearly in clear terms to you. What we are saying is that you are going to divide, the grant by its useful life, and then you are going to recognize systemically, through other income in the profit or loss account, as well as in the statement of financial position. Now, look at it this way. We said earlier that, look at the example we gave earlier. You bought the asset for 100,000 and you receive a government grant of 20,000. Now, in the full method, we say you remove the 20,000 and what you have left is 80,000, and that is what we will carry in your book under the statement of financial position, meaning you are not going to recognize other income in your statement of profit or loss. But under the deferred method, that let's assume that the useful life of this asset is 5 years. If the useful life of this asset is 5 years, it means that the 20,000 grant that you have received, you are going to divide it by 5 years. And if you divide by 5 years, what you are going to have is 4,000. So each of the year, you are going to be recognizing 4,000 in other income. 4,000 in other income. Whereas you are going to carry the cost of the machine at 100,000 in your statement of financial position, and then depreciate it yearly. Is that taken? When we look at the example now, you will understand it better. Any question so far? Any question? Can we move ahead? If you are okay, just give me a high five so we can move ahead. Okay. All right. Thank you so much. Let's move ahead quickly. But you can be putting down your question, and I hope that you are writing. It's very important that you write something down, please. Thank you so much. So let's quickly go to this illustration. Now look at this illustration 1. You have just been recruited by I Must Pass ICANN PLC as a financial controller. I hope you can snapshot it. If you can, fine, I like that. You have just been recruited by I Must Pass ICANN PLC as a financial controller. In your first board meeting, the MD directed you to explain how to go about the government grant of 15,000 received from a plant acquired at 100,000 naira, given that the plant was installed in Ibeju-Lekki, where the government had posited for future economic boom. The precision rate is put at 20% per annum. Require show in the financial statement the first year entry if the grant were to be deducted at once. 2. If the grant is to be deducted on an annual basis. Now, looking at this question now, if I may ask, can anyone help me to just give an overview? If you understand what I've said so far, just somebody should just help me. Okay, Oyepeju Oyedapo, you are raising your hand. Please speak. Oyepeju Oyedapo, are you there? Okay, A. Folorunsho, go ahead. Folorunsho, go ahead.
Yes, it's a capital grant because it's aimed on the condition that they have to build their facility so that they can receive a grant from the government because of the future boom that is expected in that area. So that 15,000 grants, we can, if you are measuring it in full, we are going to deduct the 15,000 naira from the 15,000 naira grant from the 100,000, and then recognize the balance in the carry the balance in the books of accounts.
In the statement of financial position, you have even tried, You have even tried. So what this is saying is, if you are using the full method now what this is saying, if you are using the full method, you are going to deduct this 15,000 from the 100,000, meaning you are going to have 85,000 remaining. Now this 85,000 is what you will depreciate over the useful life of the asset if you are using the full method. Is that taken? Now, any other person can help? Who can help and speak again? Any other person? Just raise your hand and we'll call you. Are we still together? Where is my friend now? Emmanuel Babatunde, where are you? You are not speaking tonight. Joy, where are you? Adiola? I should recap all I've said so far. You are okay, or I should just solve this question and you will understand?
Help us to recap, sir. God bless you, sir.
Okay, let me just quickly recap. Now, please listen very, very carefully. We are looking at IAS 20, that is government grant. And we said that by definition, government grants, they are, allowances or transfers or that are received by an entity having fulfilled certain conditions. You understand? Now, IAS 20 has two legs, government grant, and we have a government allowance. Government grant, and then we have a government allowance. Now, for government grant, you are going to account for it. You understand? I mean, government assistance, sorry. We have government grant and government assistance. For government grant, you are going to account for it in your financial statements. Whereas for your government assistance, you are not going to account for it. Rather, you are going to give what we call disclosures. We are looking at IAS 20, government grant, and government assistant. For your government grant, for you to receive the grant, certain conditions must be met. But for government assistant, you don't need to meet any conditions before you receive it from the government. Now, for government grant, conditions usually is that you should construct maybe an asset, or provide a facility, or make sure you fulfill your corporate social responsibility and the likes. Now, once you're able to meet that condition, you receive that grant from the government. That type, you have to account for it in your books. Whereas for the government assistant, you don't need to meet any conditions. Government might just wake up one day and say, we are giving all the entities 20,000 relief transfer, cash transfer. That one, you cannot recognize it in your books. Rather, you only disclose it and say to government, give us this amount of money. You understand? That one is an assistant, it's not a grant. But usually, assistants will always come in the form of tax relief. Usually, assistants will only come in the form of a tax relief. And once this happens, you don't need to, that tax relief, for instance, you only use it to reduce your taxable expenses, and that is that for that. So, when we are talking about this government grant, usually you can have two types of it. That's the definition. In case you are just joining us, that's just the definition. The difference between the two is that one, you have to meet a condition. The other one, you don't need to meet any condition. For government grant, you meet conditions. For government assistance, you don't need to meet any conditions. And so, we mirror down to only government grant now, because you are only going to account for government grant in your books. For government assistance, you only give disclosure. So, we are accounting for government grant now. So, but before we account for it, you need to understand that we have two types of government grant. Two types of government grant. The first one is a capital or asset grant. Capital or asset grant. And this is a type of grant that the conditions that you have to meet is that you must either construct or purchase or acquire a non-current asset. Either you purchase, you construct, or you acquire a non-current asset. And sometimes it may be that you should, locate maybe your plant or your machineries at a particular location. Sometimes it comes like that. And so, once it hinges on, non-current asset being acquired or constructed or purchased, that is what we know as a capital or asset grant. That is the condition. But the second one is income grant. This income grant has to do with all other conditions that you have to meet apart from the condition of purchase, construction, or acquisition of a non-current asset. Is that taken? And that is that for that. Now, we move quickly to the recognition. What is recognition? Recognition means what are the criteria that must be met for you to recognize government grant in your financial statement. The first condition, the first criteria is that the condition must be fulfilled. If once you see that the condition has been fulfilled, you can recognize government grant on your financial statement. If the conditions are not fulfilled, you can only disclose it in your books. That is that for that. Number two, we said when it is highly probable that there will be that you are going to receive the grant. In other words, the assurance that you are going to fulfill the condition is highly probable. That is when you also recognize government grant in your book. It's as simple as that. Whereas for measurement, that is the calculation now, we said two approach can be used to calculate your government grant. Number one, you can either use the capital approach or you use number two, the income approach. The capital approach has to deal with only the asset in nature grant. The asset in nature grant. In other words, the ones that has to do with the condition of you, either purchasing, acquiring, or constructing a non-current asset. Under this capital approach method, capital approach, you can use two methods. You can use two methods. Either you use the full methods or you use the deferred methods. The two are different. You can only use either of the two at once as an entity. You can't use the two at the same time. You have to choose one. And anyone you choose, you also have to disclose it. Please note all this disclosure that I'm saying. No, they might ask you in your exam, and I will hopefully we'll get to that point tonight. Full method. Under the full method, this one is very simple. It is like this. Once you receive the grant, you deduct it fully. You deduct it fully from the cost of the asset. Then, whatever is the balance is what you carry in your books and depreciate over the useful life of the assets. That is that for that. Then we have the other one that has to do with deferred method. Under this deferred method, the difference is this. Once a grant is given, instead of you deducting it directly from the cost, you are portioning it over the useful life of the asset. In other words, you divide it into the useful life of the asset and recognize it as other income in your statement of profit or loss. Whereas you are going to carry the cost of the asset. You are going to carry the cost of the asset in full in your statement of financial position, and then you depreciate it that way over the useful life of that asset. It's as simple as that. I hope it's clear now. Any question? Is it clear now?
Yes, sir.
Please, if they ask you a question in your exam, don't fail this one. It's very, very simple and straightforward this way. Now, let's look at this illustration very quickly. You have just been recruited by I Must Pass ICANN PSC as a financial controller. In your first board meeting, the MD directed you to explain how to go about the government grant of 15,000 received from a plant acquired at 100,000 naira, given that the plant was to be installed in Mbejuleki, where the government are positioned for future economic boom. The precision rate is put at 20% per annum. Required show in the financial statement the first year entry if the grant were to be deducted at once, if the grant is to be considered on annual basis. Now, the question I want to ask is this. Go to required. Now, let me also give us an advice tonight. Once you see a question in your exam, first of all, go and read required before you go and read the body of the question. Go and do what? Read the requirement first. What you are required to do before you read the body of the question. Once you read the requirement, it gives you an overview of what you are looking at for in the body of the question. Now, required. Show in the financial statement the first year entry if the grant were to be deducted at once, if the grant were to be considered on an annual basis. Now, I ask you, class, if the grant were to be deducted at once, what kind of method is that one? Anybody just raise your hand? What kind of method are we considering that? There. Okay, Olamilo, can go ahead.
That would be full method, sir.
Full method. Please let me clap for him. Thank you. You are not clapping. If you do not clap, will not. Okay. Thank you. So let's go to the second requirement. They say if the grant is to be considered on an annual basis, what kind of method is that one? Just raise your hand. Okay, Taufik Olalekan, go ahead.
That would be deferred method, sir.
Deferred method. Thank you so much. So please, can you try it on your own, or we should do it together? Can you try let's just do it together so that you have a better understanding. And then the other one, I will give you as an assignment. Everybody will have to solve it and submit it back to me. Now, so let's go solution. I must pass ICANN PSA. I've also done the solution so that it will be more seamless for us. So this is under the full method. I must pass ICANN of profit or loss for the period under consideration. They didn't give us here. That's why I put for the period under consideration. Item, amount, remark. Under item we have expenses. How we can see it? Under item we have expenses. The amount. Under expenses we have depreciation. We have depreciation 20% of 85,000, and that is 17,000. We are looking at a full method, and I put here under the mark so that it will help you. Being full method, we deduct the grant in full from the cost, and whatever that is remaining is what we depreciate over the useful life of the asset. But we are not told about the useful life of the asset, but they give us a depreciation rate. In other words, they may not give you the useful life of the asset, but they will always give you the depreciation rate. They can as well give you the depreciation rate and give you the useful life of the asset. Anyone they ask you to use it. And anyone you use, if they are silent, also put it note. This is what I have used. Is that taken? Thank you. So now, that is for the full method. The statement of profit or loss is how it will look like. You only recognize expense, depreciation 20% of 85. Who can tell me how we got this 85? Raise your hand. Vivian, go ahead.
That's the cost of the plant, 100,000 minus the 15,000 government grant.
Why did we have to remove it? Vivian, go ahead.
That's because of the way the full method measurement
prescribe
of
it.
government grant.
Prescribe it.
Thank
you. Thank you so much. You see, let me clap for her. Let me clap for Vivian. Vivian, I'm giving you 1 mark. You are looking for 49 to pass.
Thank you.
Thank you too. So let's go to the statement of financial position now. Statement of financial position. Item, plant, 100,000 minus 15,000, that's 85,000. Depreciation, 20% of 85, 78,000. Carry amount, 68,000. This is how to just recognize it in the book, and that is it. I'm sure if you see this kind of question in your exam before now, you will be thinking that it's something that is strange. This question that you are saying now, I only changed the name. It's an ICANN question of 10 marks. I've forgotten the year. I will look for the year. I will forward it to you people. ICANN question, 10 marks. Okay, Justina, you are raising your hand. Go ahead. Justina Oluwakemi Ehinola, you are raising your hand. Okay, let's move ahead. So that is that for that. Any question? Is it clear enough? Is it clear? Hey, follow on show. Okay, go ahead.
Yeah. Oftentimes they normally give other methods of depreciation. Suppose we're giving, we're asked to use maybe reducing balancing method of depreciation. Because I know that some questions I came across a few of them like that, so they were asked to use a reducing balance method. How are we going to address that?
We have done it in PPE, except if we are not in class in PPE. We did the reducing balance and we did the straight line method now. Reducing balance is just very simple. What reducing balance required from you is, for instance, now we have gotten current amount to be 68 in these questions and also. Now, reducing balance will require that you are going to now take 20% from 68 as your depreciation. Now let's assume this question to be on reducing balance basis. Are we together, please? Let's assume this question will be on reducing balance basis. You know, we are done with year 1. If we are going to do year 2 now, year 2, this is the current amount. Year 2 depreciation will now be 20%. 20% multiplied by 68,000. Are you seeing it? That's how to do reducing balance.
All right.
You see, very simple. So whatever they ask you to do, as long as I said, if you have not attended my classes before, whatever they are telling you, you must deal with them on. I must not see you in the next class here. I want to see you in professional. And so shall it be, by God's grace. Is it clear now?
Yes.
Thank you so much. So can we move ahead now? So now let's look at the deferred method. Now we were told that if it were to be on an annual basis, what do we do? Look at it here. I've also done it in a seamless way. Under the deferred method, I must pass a comparison of profit or loss for the period under consideration. Item, amount, remark. You know that under the full method, there is nothing like other income. Is that not so? Why? Because we have already removed the whole grant from the total cost. We are now carrying the full, what is it called? The full cost. I mean, we are now carrying the remaining cost after the grant has been deducted in our statement of financial position. Do you understand it now? But under the deferred method, we are going to have what we call systemic recognition of the grant and the likes. So that is that for that. So please, let's really run through. We have just about 15 minutes thereabout. Let's really run through this one. Now, this is how to do it. Grant is 15,000. Recognize the first year 20%. You have 3,000. So under other income, you have 3,000 because we are doing it, or we are dividing it, Abi. And they don't give us useful life of this asset, but they give us the depreciation rate. So once they give you the depreciation, just use the rate. Don't bother yourself about the year. So the depreciation rate is 20%. 20% multiplied by 15,000, we give you 3,000 as other income. Then under expense, you are going to recognize depreciation. But remember, look at our depreciation here now. We did not remove the grant from the cost. We are carrying the cost in full under deferred method, and we recognize depreciation on it. 20% of 100,000 is 20,000. Very, very simple. Then under your statement of financial position, you have plant amount to be 20,000, depreciation to be 20,000. Current amount is 80,000. You see? Are we still together? That's what? 80,000. Now, assuming we are using the reducing balance basis now, we are just going to come and say 20% of 80,000, and that will give us the depreciation for year 2. Is that taken? Now, we have to also determine and disclose the deferred income. If we are recognized 3,000 this year, it means that the income that is deferred is 12,000. How did we get out 15 minus 3,000? We give us 12,000. In other words, that's why we call it deferred method, because you are deferring the income until they are fully recognized on the statement of your financial statement, that this statement of profit or loss in other income as it were. That is that for that. Any questions so far? Any question? Okay. In the absence of any question, let's go ahead and then we look at then the income approach. Under this income approach, the income approach has to do, okay, Olamiloku Ibrahim, you are raising your hand. Go ahead.
Okay, yes, sir. Thank you, sir. So in the deferred method, I noticed that the remark statement You didn't write any remark. So is it not necessary for we to put remarks in that?
Come again, please. I didn't hear you well.
Okay, I said for the deferred method you solved now.
Yes.
So I noticed that you didn't put remark there. So is it not necessary for we to put any remark like you did for full method?
No, please don't go and put remark in your exam. Oh. I only put remark there for your understanding. Eh?
Okay.
Yes, don't put remark. Oh, please. There's nothing like remark in this, because. Eh? I only put it there so that for you to understand. Is that taken? Thank you so much. So, like I told us earlier, I said we have the capital approach and we have the income approach. We have looked at the capital approach now. Now we are looking at the income approach. Remember, the income approach has to do with all other conditions that are met apart from purchasing, constructing, or acquiring a non-current asset. And so, therefore, under the income approach, all that you need is to identify, either also, this one also has to, you have two methods there. Let me just put it so that you understand. You have two methods there. Full method or deferred method can also be used. But in under the income approach, whatever method that you are using, you are only going to deal with only profit or loss account. All your calculation will only end in profit or loss account. Why? Because you are not involved in any form of asset. You are not involving any form of asset. This method do not consider anything like asset. They are all other grants. They are all other grants in that you are receiving apart from the conditions of meeting with buying or constructing a non-current asset. I hope that is clear. Please, you students used to make mistakes. That's why I'm emphasizing it now. The income approach, you only consider it in your P or L statement using either of the two methods, full or deferred method. Full method is the one that is the same thing. You remove the total cost, the total grant rather, from the total expense. It's as simple as that. You remove the total grant from the total expense. That is for full method, and then you disclose it in your note account. Now, if you are using deferred method, you also divide it in numbers of years, recognizing what we call other income, you understand me now, as your grant, and that is that for that. You don't need to disclose it as it were. The only thing you need to disclose are the deferred income. So what I'm saying is, let me quickly give an example. If for instance now you have received because you have been able to meet with your corporate social responsibility, the government now give you a 20%. Let's just say government now give you 20,000 naira. For meeting with your corporate social responsibility, government give you 20,000 naira. Now under the full method, under this income approach, you are going to remove this 20,000 from your total expense. Let's assume that your total expense is 100,000. You are going to remove 20,000 from your total expense, meaning that you are going to use it to reduce your total expense for that period. And that is that for that. You hand it there. You understand? The only thing you need to do is to go to disclosure and say, government gave us grant and we have used it to reduce our expense. That's all. But if you are using the deferred method, what do? You are going to now, let's assume that the life, maybe the life of the grant, or they said, okay, they are giving you years. They give you maybe years of the grant. Or you choose by yourself. You can choose to say, okay, I want to recognize this CSS. I want to recognize this grant for 5 years. You can choose if they didn't give you. But usually, if it's a question that they are giving you an exam, definitely will give you the number of years. Now, the 20,000 that they are giving to you, how do you treat it? It's very simple. You are dividing it by, you can choose 5 years, divide by 5 years, and what you have is 4,000. Meaning that in your statement of profit or loss, you are going to recognize 4,000 as other income. You are not going to reduce the expense now. You are going to recognize 4,000 as other income. I hope it is clear enough. It's as simple as that. Any question? Are you all okay?
Yes.
All right. Okay. So now, I want you guys to snap this very question. Please, very quickly, please let me snap this question, because you will do it by yourself and you submit it to the group platform. Please snap this question. The following are summary of Say Baba PSC. Snap it. If you are done, just let me know. Once you are done, let me know. Are we together? Can I go to the next page?
Yes, sir.
Yes.
Okay. So, please, this is the next page. You can also snap it. Additional information required. Have you snapped it?
Yes.
Okay. So now that you have snapped it, this is the assignment I'm giving you. I want to task your brain. You are doing it tonight and submit it tonight. Please do it now and submit it back to me, so that I want to check if you are actually following me, and if you do not, we'll know what to do. So quickly, let's round up the class by looking at the presentation. Under the presentation is very simple. You present it in that two ways, either using the deferred income or using the capital approach, the full method rather. Either you represent it using the deferred or the full method, that is deduction from the current amount of the asset, that is reducing it as it were. The deferred income, that is recognize income and amortize over the useful life of the asset, or deduction of current amount from the current amount of an asset at a depreciation value. That is presentation for you. Then the disclosure requirement talks about the accounting policy, that is the policy that you adopt, which include the method that you use, as well the nature and essence of the grant. You have to disclose it. The unfulfilled conditions and the contingencies, you are also to disclose it. So that is that for that. There is nothing much about government grant more than all that we have looked at tonight. For those that have just joined, please meet with your colleague. They are well grounded. They can take you through. They can teach you, and then I'm sure that you are all going to have the best of time together. So in the next 1-2 minutes, ask your questions, because that is the end of IS 20, government grant and government assistant. Any question, please? Okay, Vivian, go ahead.
Please, sir, can you take your screen backwards to the solution, the first question, the solution for full method on the statement of financial position?
The full method.
I want to do a screenshot. Full method, yeah.
Okay, this is it.
Okay, sir. Thank you.
Okay, go ahead. Anyone, allow me look on your question. Allow me look on your question. Ahmed Olalekan, go ahead.
Sorry, sir. Good evening, sir.
Good evening.
I've been struggling with network since I can't see your screen. I don't know, maybe we can forward the question to the group.
Okay.
Thanks, sir. It's not come up, please. I want to screenshot, sir.
Somebody has screenshotted it. Vivian screenshotted it. She will send it to the group.
Yeah.
All right. So, any other question, please? Any other question? Okay, Joy, go ahead. Ah, Joy, you came in late. Why now? What happened? Go ahead, Joy. Hello, Joy, you are there? So, okay. If there are no any other questions, we just call it a day. Or Joy, you are here. Yeah, okay, speak. I'm hearing you.
Hello, sir. Good evening.
Welcome.
Please, I would like to screenshot the deferred tax solution, the deferred method.
Okay, you have just 1 minute. You have just 1 minute to do that. Go ahead, please.
All right.
The deferred method. Look at it here. It's just here.
Okay, thank you, sir.
All right. So please, that's that for the class. Let's ask me questions. Private chat me. I will be there to answer your questions. Thank you so much. Have a very wonderful time.